Salam alaikum and welcome to all of our wonderful guests and panelists. Today we're having an important discussion about financial crime risks and threats in the Middle East. Why is this so important? Well, the past year has created unprecedented challenges for the fight against financial crime in the Middle East. Remote working adjustments, further advancements in digitization within the region, supply chain disruptions, local conflict escalations, and evolving sanctions have all provided opportunities for organized crime groups, as well as exposing vulnerabilities in the financial crime defenses of many organizations based in the region. Has this rise in criminal attacks been felt on the ground? Absolutely. In a recent survey conducted by Themis ahead of this webinar, 83% of respondents based in the Middle East said that their company had been exposed to some form of financial crime attack over the last 12 months. And 77% felt the threat had increased on previous years. So in response to both new and existing threats, regulators and other authorities have implemented a wave of reforms that help protect firms from criminal attacks, but also create new requirements for businesses. We've partnered up with Dow Jones to explore this changing threat and regulatory landscape in a series of webinars to be held over the coming months, the first of which I have pleasure to moderate today. We'll be asking our audience and the panelists to explore the latest threats and concerns, discuss best practices, opportunities, challenges, and expectations related to financial crime for businesses across the Middle East. We're hugely privileged to have an exceptional panel of leading experts from the region with us today, and I really look forward to hearing from some of their unique practical insight. So without further ado, it's a real pleasure to introduce our panel of experts today. First up, Noura Mohammed Al-Salami. Noura is a senior manager of the Financial Crime Prevention Unit at Abu Dhabi Global Market, a leading financial center in the UAE. Noura's role is to ensure that AML regulations are implemented by relevant persons at ADGM and that ADGM's work complies with FATF and international best practice in relation to financial crime prevention. Prior to ADGM, Noura was a compliance director at First Abu Dhabi Bank. We also have Susan Daniel. Now, Susan may be experiencing some challenges connecting to us, but we hope to hear from her in a minute. Susan is Chief of Assurance and Governance at a leading public entity in Oman. She has over 30 years experience with skills in risk management, corporate governance, internal audit, organization structuring, process engineering, and internal control frameworks. Susan has worked for various industries, including oil and gas, financial services, sovereign wealth funds, service industry, healthcare, and manufacturing in the United Kingdom and in Oman. Gurminder Singh. Gurminder is head of compliance at Al Rostamani International Exchange, a market leader in currency exchange and remittance services in the UAE, where she's responsible for the firm's internal compliance and ethics programs. Gurminder has over 20 years of financial services industry experience and specializes in the regulatory compliance of money service businesses. And last but not least, David Hodgson. David is head of content strategist for data strategy at Dow Jones. He leads a team of subject matter experts supporting the professional information businesses at Dow Jones, including risk and compliance. Prior to joining Dow Jones, David worked in legal services and in the non-profit sector. My name is Dickon Johnston, and I'm the CEO of Themis. I spent over 10 years in the region working directly for international and local banks. Since joining Themis, we've established our regional headquarters in Abu Dhabi Global Market and are working with many Middle Eastern companies, helping them identify, monitor, and manage their financial crime risks. It's a privilege to be moderating today's discussion, and I'm hugely grateful for the fantastic support and dedication to the cause from our partners at Dow Jones Risk and Compliance. We also have a wonderfully diverse audience here today with, I think, over 320 people registered, representing many different countries in the region, from the UAE to Saudi to Oman to Bahrain, Qatar, Jordan, Lebanon, and Egypt. Apologies if I've missed any off, but feel free to say hi in the group chat on the right-hand side of your screens. Now let's start by looking at the views of our audience today. As business leaders and financial crime experts working in the region, what are the key financial crime threats that you are worried about? So to kick us off, here's our first poll, which you should see on the screen now. Has your organization been exposed to any of the following financial crime threats over the past 12 months? So if you could all have a look at that and vote for any that your organization has been exposed to, from money laundering, terrorist financing, fraud, bribery, corruption, sanctions, cybercrime, proliferation financing, modern slavery and human trafficking, or any others. Okay, great. Now let's just have a look at those results. So I think the results are in, and really interesting, and very much in line with the survey that we did before this thing as well. So fraud, really one of the key threats affecting the region, as well as cybercrime, money laundering, and others. Interestingly, actually, in our survey, we heard about some quite specific types of fraud, from financial fraud to trade-based money laundering, to fraud related to COVID supplies, including medicine. We also got many examples of cybercrime, both at an institutional level with large-scale data hacks, but also on a personal level, with a wave of very sophisticated scammers targeting individuals, from invoice frauds to rerouting payments to using text messages to obtain personal information and bank details, etc. So a key question here: what protection do the banks offer for victims of fraud and cybercrime? And I'm sure that's something we can explore later on in the webinar as well. So let me turn to our panelists and see if we can explore some of these financial crime threats over the past 12 months. So my first question is for Nora. Nora, one of the main regional drivers of action has been the wave of assessments from the FATF. So from Saudi in 2018 to UAE in April 2020, amongst many others. We'll go round the region over the course of this discussion, but Nora, let's start with the UAE as the recipient of the latest FATF report. As one of our leading regulators in the UAE, what, in your opinion, has changed in the UAE's financial crime prevention landscape since this report was published, and how well are its recommendations being implemented?
Thank you for your questions. From the UAE perspective, it's important to note that the UAE government remained fully committed toward the protections of its financial system through the institutionalizations of the post-AML framework that combat money laundering and terrorist crimes. There are a number of significant enhancements that has been taking place since the publications of the UAE FATF Mature Evaluation Report. Beginning said that from July 2020 to date, the UAE has strong the AML legislations and regulations. Also, the UAE revised its national AML safety strategy and actions plan to address the gap identified in the FATF report, undertake to build the capacity within the public sectors through the AML certifications, and engage with the expert consulting a number of the AML initiative to enhance the overall effectiveness of the AML regime. Besides that, the UAE also established the executive office in the AML safety to champion and to coordinate the centralizations of all AML safety efforts within the UAE. As well, the UAE aligned its company registrations framework across the UAE and improved the provisions of the beneficial owner information through launching the National Economic Register. And as a financial innovations, it's good to notice that the UAE enhanced the implementation of the target financial sanctions by creating the TFS portal webpage, enabling the UAE relevant to subscribe and to receive a sanctions alert without delay. Also, we as a UAE, we move from our traditional methodology of raising suspicions activity, transactions report, to digitalized tools, namely GoAML. In addition, as a UAE, we have launched the coordinations and cooperations among regulatory bodies where it's established a various committees such as the National Risk Assessment Committee, AML Supervisory Committee, International Cooperations Committee, where we as ADGM has a membership in all of these committees. From the ADGM perspective, the Financial Crime Prevention Unit with the NFSRA align its strategy and operational plan to ensure that the UAE national AML priorities are appropriate addressed. That include the creations of the ADGM AML task force, which meet in periodic basis to discuss and raise AML objective of mature concern to ADGM as well to the UAE. Thank you.
Thank you, Nora. And I agree. I think there's been real evidence of quite significant advances in the UAE. You know, the GoAML platform you mentioned is one, but it's very nice to see, you know, a huge focus coming from government, regulators, but also businesses in the region as well. And we've certainly seen a hive of activity over the last 12 months and on, which is fantastic. Let me dive down into some of those specific industry kind of questions and challenges. So Gurminder, money value transfer services feature extensively in the FATF report as an example. Now, from your perspective as head of compliance in a currency exchange business, what effects has the mutual evaluation and the ensuring recommendations had on your industry specifically? I think, Gurminder, you're still on mute, I'm afraid. There we go. We can.
This is better?
Brilliant.
Yeah. So thank you, Dickon, for the question, and good day, everyone. Thank you for attending this wonderful session. So, Dickon, if I have to answer your question, I'll sum it up in a sentence or two. I'll say it has been, and it still is, a roller coaster ride. It is fun and it is daunting both at the same time, but now I guess we are in a steady rhythm. So if I have to actually tell you, this ride did not start after the mutual evaluation. It started at least 2 years before this evaluation actually took place. We were, we had new standards, we had new cabinet resolutions, and as Noura, clearly stated, and we had new, laws that were implemented at that particular time. UAE scored very well on the technical compliance, but with the effectiveness, we lagged a bit behind. Probably one of the reasons was that the laws were still getting implemented. Having said that, if I have to come back to the question how the mutual evaluation actually affected the money service business, I would say immensely. We saw standards and laws which were overhauling what we knew and we did for the past 20 years. The laws were very descriptive. They were starting from capital efficiency to governance to committees, operations, HR, anti-money laundering and compliance, and even consumer protection. So we were doing things very differently. Some of the major MSPs, though, were doing all of this, but to show effectiveness and to show evidences of doing it uniformly across the industry was a daunting task for all of us, I must say. Coming back, now these laws were enacted and so did the central bank grow. There were a lot of new divisions that were being created in central bank. That means more detailed and advanced examinations of the MSP sector. These examinations, came with a price. These examinations were like we had to conduct gap assessments, we had to conduct risk assessments. There were risk ratings assigned to the MSP sectors, which had implications on our business continuity, business expansion, and also some of it actually led to enforcement actions. You must have read it in the news that there were fines and penalties which were imposed on certain money service businesses also for not implementing or adhering to the laws that were, being implemented before and after the mutual evaluation. Yes, central bank has been helping us. I would definitely say so. There are a lot of workshops which have been, organized before and after the mutual evaluation. A lot of guidance papers have been issued on how to, deal with the targeted financial sanctions, AML procedures, legal persons, and also how to deal with certain types of industries like the dealers in precious metals and stones. So all in all, I would say that the roller coaster is still on, but we are catching up with the rhythm. So yes, it is a humongous task ahead of us, but we are almost there now. Thank you.
That's brilliant. Thank you, Gominda. And I absolutely agree. This isn't the last 12 months. This has been a consolidated course of action from across both the industry and regulators for some time now. But really the purpose of this series of webinars is also to kind of share some of those lessons learned, best practices, and kind of common challenges across the industry. So I hope this provides a useful platform for our audience as a way to kind of really ask those questions as well.
I'm sure.
Thank you, Gominda. Now, Susan, welcome. I know you've had quite a stressful time joining this webinar, but very pleased that you've made it on to the panel. So thank you very much. This series of webinars does focus on financial crime risk in the Middle East. So I don't want to just focus on one country. And perhaps we can now travel across the region and come to you in Oman. So I wonder if, Susan, you could elaborate on a couple of the main financial crime issues that are most concerning from the perspective of sovereign wealth funds or others across the region.
Well, thank you, Dickens. Finally, I can appear and confidently speak with yourselves, and it's a pleasure meeting everyone on the panel. I think it's a great opportunity that we're having this, and it's timely as well. This is obviously a topic that cannot escape anyone's concerns, and certainly if it's anything that makes the board of directors lose sleep, that this is certainly the topic. Now, on a sovereign wealth fund, having worked with other global sovereign wealth funds, what I probably will have to home into is the fact that a sovereign wealth fund is perceived as a public servant and obviously provider for future generations' income and so on. So every single thing that the sovereign wealth fund does matters, not just to themselves, board of directors, but also the public. And in terms of the kind of risks or the kind of crimes or the potential crimes that may occur in a typical sovereign wealth fund is largely dependent on who you're dealing with, because as a sovereign wealth fund, your funding is pledged with a custodian. So the reputation of that custodian, what financial crimes they may be exposed to, might be an issue, and that might impact you, not necessarily just in terms of loss of money, but also reputation risk, because whoever you are using as custodian might be an issue. The other side of it is you're always on a buy side. So you are buying investment, you are investing. Sometimes you're investing with a partner. You may never know that much of a story about the partner. So the partner might be someone that you've never physically met, or it could be an institution that you've never done a thorough understanding or due diligence on. So we spend quite a bit of time finding out what we call a KYC, knowing who our partners are, knowing who our potential investors are, and also the target, where we are investing, how we're investing, how much we're investing, and what kind of authorities are we getting. Now, these are kind of like a very, very high level issues, but, we're impacted by cybercrime as well, because as you know, COVID-19 has made each and every one of us stay at home, and the channel of communication being quite open via WebExes or via Microsoft Teams and so on. And that really, you don't feel comfortable if your firewall is not protecting those private conversations, especially when you're negotiating a purchase price. These are some of the things that I would say, on a very, very high level. But, it's a very large concern to any sovereign wealth fund. And I think there have been many lessons that we've learned from in the past. Not just, I'm not really quoting Oman per se, but having worked with other sovereign wealth funds, it's a problem they all face. Who's our partner, who we're investing with, how we're getting returns, and how do we safeguard ourselves against anything that might happen. The other side of it is when you are in receipt of those distributions or dividends, or when you sell the asset, how does the money come back? how are they treated? That's another area that, you know, the channels may not necessarily be very clearly laid out. Now, not many sovereign wealth funds have international standards, so therefore they set the standard themselves. I mean, in the region, you have so-called investment authorities. These are acting as an authority, i.e. regulators, setting the rule of the game, as well as obviously embarking on investments and so on. So that in a nutshell, I hope, you know, answers your question. But that's a typical sovereign wealth fund setup that we currently have globally, not just within this region.
That's excellent, Susan. Thank you. And such an interesting point, because I think, you know, historically the conversation used to just be about KYC. And I think more and more businesses are now really understanding the impacts that financial crime have, not just on people, but also on our planet, also on businesses, on our economies, etc. And therefore, I think it's really important that we look at who we're investing in or who we're lending to as well. And what are the financial crime risks that are associated, not just there, but down the supply chains as well? And are we kind of directly or indirectly promoting nefarious practices? So I think such an important point of view, and thank you for expressing that, Susan. Really, really appreciate it. And last but not least, David, if I could turn to you, perhaps you could take us further across the region. So what reactions have you seen in your and your colleagues' discussions with firms across the region since the release of the various FATF reports, and also the kind of wider increasing understanding of financial crimes and the impacts those crimes have?
Okay, and just want to say, first of all, good morning, good afternoon to all of those who are attending and to my fellow panelists, and thank you so much for inviting me. It's a big question, and I will try to answer as best I can. So I think, as Nora already mentioned, the FATF report, after it was issued, there has been actions taken. But one of the consequences we are seeing, in addition to that, are more regulatory pressures from the central bank in the UAE, and the regulators are being put on, the regulations that are being put on financial firms in the region to raise their standards when it comes to AML and sanctions compliance. And I think most everybody on the call, a number of you will know that the central bank issued fines to 11 banks operating in the UAE in January of this year around AML and sanctions control failings. And while the banks weren't named, it is sending a clear message that the enforcement actions will be taken unless regulated firms can demonstrate that they do have robust plans in place and procedures to fight financial crime. But it's not just about banks. It's also about other financial actors such as money exchange houses. And as was already discussed, the central bank was already very vocal before FATF visited and around this issue. I think one of the other related impacts for these types of financial firms is to look more closely at their processes and controls when it comes to fighting financial crime. And we did quite a bit of work with the Foreign Exchange and Remittance Group, FERG, which is an industry body that represents MSBs in the UAE to support its members in rolling out programs that will ultimately help these MSBs in meeting tougher local AML regulations, but also importantly improve their relationships with correspondent banks or their correspondent banks. There's another part of the FATF report that we've seen a lot of focus on more recently, as well as the DNFBPs, the designated non-financial business and professions. And that's real estate agents. There's dealers in precious metals and stones, lawyers, because these groups are also looking to equip themselves to deal with this. In general, there and across the region, it really all comes down to the whole idea of risk-based approach and a robust sanction screening program. And people are asking, customers, companies, individuals are asking for seasoned compliance professionals and firms to provide advice, and then translating that approach to screening processes and workflow, which all boils down to working on your best practices for mitigating your risk. I hope that answered the question.
It does indeed. Thank you very much, David. Thank you. I think, as you say, a lot of countries in the region have implemented national risk assessments recently, which is fantastic. And businesses are being encouraged to really take those into account and also perform their own business risk assessments so that they really understand the specific risks that they are exposed to as organizations. And I think the kind of frameworks and screening that you talk about, David, are so predicated on having that specificity across your own business, which is really important. So thank you. Okay, we focused initially on kind of external evaluations. Is this a key driver of change, or are there other threats or drivers that businesses out here are really focused on? Let's turn to the audience and ask them, as I want to kind of gauge everyone's views about what other potential key drivers of financial crime risk or developments there are in the region. So our next question for you all is coming up on the screen any minute now. Which of the following factors has, in your opinion, had the biggest impact on financial crime in the Middle East over the past year? Is it new financial crime regulations that we've talked about? Is it rapidly evolving sanctions, regional conflict escalations, COVID-19, or increasing criminal sophistication and use of cyber methods? So if you could all vote now, that would be fantastic. Obviously, many of these factors are making a strong appearance in our recent Themis survey. So 80% of survey respondents we polled said that they were highly concerned about the sanctions risks in their organizations. Another 48% were looking for additional guidance from relevant regulators about new laws and regulations. So how does that fit with the audience today? So I can see there, it's gone now. I could see there, but it looks like rapidly evolving sanctions are a key threat as well as new financial crime regulations as well. And we're going to explore some of these over the course of this webinar and the future webinars that we're putting on with Dow Jones over the coming months as well. Let me pick on one of those responses there. So I think 13-14% talked about COVID-19, the dreaded subject that we'd all rather forget, I think. But perhaps the first question for you, Nora, here. So COVID-19 has, of course, created unprecedented challenges across all spheres, sectors, and across the world over the last year. What effect has the pandemic had on financial crime risk specifically, and also risk mitigation in the region?
Thank you for your questions. First of all, on behalf of ADJM, we have observed strategic migrations of criminal activity toward inland channel. And I believe this is not only the case in the UAE, but globally as well. We have noted that some threat actors have been leverage information in COVID-19 to spread malware infections through phishing means. We have also observed a noticeable increase in relying on the third-party solutions and accessing the database remotely through the cloud arrangement. The increased relying on technology has exposed our financial institution to new digital vulnerability. In order for us as a regulatory body to mitigate these risks, we have been taking in a number of initiatives, such as we conducted a cyber tech questionnaire, where the outcome of this questionnaire assists us as a regulatory to overall understand the control applied by our financial institution. And as a result of this, we have issued a circular notice that has been used as an opportunity to first to alert our financial institutions of the various methodology of the various methodology employed by the threat actors. And second, requested our financial institution to prepare for possible business distributed and proactively assess the cyber hygiene practice followed by their remote workforce. In addition, ADGM has issued ADGM governance principle mainly to supplement the existing cyber governance and the risk management and to provide the baseline considerations for cyber risk assessment, third-party service provider, incident response planning, and cybersecurity awareness and training. And adding that, in cooperations with other UAE supervisory authority, we have issued a joint guidance. The purpose to guide in how to mitigate the risk associated with non-face-to-face interactions and encourage the use of technology, include fintech, regtech, and subtech, including the AQIC. And the most recent initiative, we have incorporated with the UAE Regulatory Authority and launched a consultations paper in the guideline for financial institution adapting enabling technology such as big data analytics and artificial intelligence, biometrics, cloud computing, and distributed ledger technology. The objective of these guidance are to promote the safe and sound adapted of this technology by our financial institution across the UAE, so that the risk arising from the adapting of innovation activity are proactively and appropriately managed. Thank you.
Nora, thank you. And really, really important and nice to see that ADGM are issuing the guidance to help firms kind of understand some of these latest challenges. You talked there about cybercrime and the threats around that. That obviously came out in our polls in this webinar and also our recent surveys. And we've seen a lot of kind of frauds being extrapolated that way as well. So really, really important that we do focus on our cyber controls. And you also talked about the importance of using the right technology, whether that's fintech, regtech, digital ID. So turning to David now, obviously, as Nora said, the importance of data and technology is really increasingly valuable in the fight against financial crime. From your perspective, what are the biggest challenge that you see as a data provider kind of helping regulated firms in the Middle East comply with their multiple requirements?
So COVID has definitely underlined the importance of data and technology, piggybacking on what Nora just said, obviously. So basically, whether clients are working in the office or they're working remotely, the biggest challenge for customers is making sure that they have access to data and the systems when they need it, how they need it. So we've seen clients pivot during this whole time to be able to ensure that their systems were secure for both office and home working, as did we. Interestingly, we have, due to these changes, we have seen clients that seem to have more time. I don't want to jinx it, but seem to have more time to want to understand more about data and technology. They are more inclined to attend events like this one, to learn more from companies like us and all of the other panelists here, and their peers. And I think partly that's because it's connection, and partly it's because there's no travel time and associated costs, and everybody wants to build their knowledge in one way or another. And I think that has been one small upside to the whole pandemic. From that perspective, I think the biggest challenge, as I mentioned earlier, is regardless if there's a pandemic or not, right, is for companies to actually know and understand what the regulatory priorities are, what those policies are to ensure that they're complying. And that they have the data needed to meet that. And obviously, as a data provider, we want to provide that as much as possible. And I think I just want to add one small personal comment to all this, if I may. which is that for the last 15 months or so, I've been on a number of calls with customers around any number of data-related risk and compliance content questions, since that's my focus. One thing that seems to have happened, and I think it's because so many people are talking to so many other people in their living rooms and in their bedrooms and in their kitchens. And so it becomes much more personal. It's very hard to have the same interaction. You become much more connected, as I said earlier, than if you are standing in an office in a business suit. And if there's a cat running in front of your camera or a dog barking in the background or children, people listen differently. And I think it has provided us the opportunity to connect with our customers and explain the data and the technology in a different way that is more accessible. I don't want this to continue. I want us all to go back to where we used to be as much as possible, but it has provided that as well.
Fully agree, David. Thank you. And I think more and more people are having this conversation about ultimately understanding their data and how they can make sure that that's kind of right and accurate and relevant to their businesses as well. I'm going to come back to that point in a second. Just to the audience, what I will say is quite soon we'll be starting a kind of audience Q&A. So please do ask any questions that you have. I think you can do that via the kind of Q&A panel that you have on your screens, and then I'll try my best to field as many of those as I can to our panelists. But just coming back before we do that onto that point around data, and in particular around beneficial ownership data. So we all know from the various risk assessments that many countries in the Middle East serve as a regional trading hub, as an international trading hub. And therefore, with things like free zones and international trade and a high population of kind of foreign residencies in these countries, beneficial ownership data can be very hard to really track down and understand. But as part of a series of legislative changes aimed to improve corporate transparency in the region, many companies are now required to keep registers of their beneficial owners and shareholders. So specifically in the UAE, we saw Cabinet Resolution number 58 on regulating UBOs, which came into effect in August last year. And this requires companies to report on UBOs with greater than 25% shareholdings and or key voting rights and add them to the RBR, or the Real Beneficiary Register, as well as the PSR, the Partners and Shareholders Register. Now, according to a recent article in the Gulf News, this law affects over 500,000 non-financial businesses, and administrative penalties and fines of up to 100,000 dirhams are beginning for companies who don't comply from July the 1st. So actually just in 3 days' time. So this is really very much an issue of the moment. So perhaps I can ask Gominda, do you think this recent regulation around ultimate beneficial ownership is going to have tangible consequences for the regional fight against financial crime?
Thank you, Dickon. And I believe, and I sincerely believe, being the head of compliance for a money service business, that this register is definitely going to be very beneficial for all of us, not just in terms of the KYC information, but also in terms of fighting the financial crime, money laundering, terrorism financing, corrupt individuals. So as you rightly said, this cabinet resolution came into effect last year. The date has been extended once for complying to the regulation, and there will be a penalty. Now, how is it that it is going to help us, and what is it going to do? So I'll just say that the UAE has 2 financial free zones. It has 29 commercial free zones, 2 financial free zones, 29 commercial free zones, and 39 registries. Now, all of these companies which are registered, they have different rules. All these registries have different rules in terms of the UBO requirements. So all these different registries are being exploited also for this particular reason, wherein the UBO information might be very, very limited, in a particular commercial free zone. So that actually adds up to it. Now, these structures can be very complex as well. These commercial companies, these can be very complex. They can have nominee shareholders, they can have shadow directors, they can have PEPs, they can have sanctioned individuals, and they are very opaque in nature. So for us, when they come to us to avail our services, we are mandated to understand who the UBO is. Now, there are only two ways a financial institution can do this. Either you ask for a self-certification from the company. Now, how genuine and how reliable that is a question mark, because the onus is on a financial institution to say that yes, they have done their reasonable bit to identify who the UBO is, but if you're caught on the wrong foot, you are caught on the wrong foot. As simple as that. The second way that we most often rely to is either the public registry, which has very limited information as of now, or we go on to our favorite companion, as we all call it, the Google, the public domain. So we try and investigate, we try and get details, we try and find the networks and the links, but most often or not, we will reach a dead end, or this information again may or may not be reliable. As we are all saying, this is a new age where the financial crime individuals or these specialists in financial crime, they actually are a step ahead of us. They actually know how to exploit or how to obscure the information that is available on the net as well. So we reach dead ends as well. So with the coming of this new registry, it will be definitely an advantage for us to identify who the actual controllers are. Whether these are shadow directors, whether these are nominee shareholders, each and every individual will be listed there. So this will not only help us in identifying, these will also help us in stopping and reporting of these transactions. And it will operationally, if I have to speak, it will actually reduce a lot of our cost. It is a very time consuming and it is a very cost effective, as of now, trying to find the UBOs. So it will actually reduce that cost. We can use those, we can utilize those resources into actually fighting the crime, because we have this identification. Now, having said that, it remains to be seen whether these registers, how the data that the companies are, entering into these registers, how that is going to be verified, whether this is a genuine data, the genuine entry or not. Secondly, what remains to be seen is whether these registers will be made publicly available to at least the financial institutions so that we can incorporate them into our onboarding procedures. But all in all, it's a very good move. I feel it will, lift a big burden off the financial institutions, and it will probably be the first start to providing central KYC utilities also across the financial industry in UAE. Thank you.
Thank you, Gaminda. And again, incredibly important. And I think, as you say, what we've got to remember is the objective here is to fight financial crime and try and find and identify criminal organizations and organized crime groups. And they're becoming increasingly sophisticated. Now, the value and importance of beneficial owner data is that there are many legitimate businesses that we deal with on a day-to-day basis. And if you ask them the right questions, they will give you the right answers. But it's the criminal groups and criminal organizations who are deliberately trying to obfuscate their activity and their transactions. And so I guess really that's the key, is that kind of level of enhanced due diligence to try and find out why they're hiding their activity in this way. Okay, very good. Now, if I can move to the audience Q&A. So we've got about 20 minutes for questions from the audience, and we've got lots coming in. So thank you very much for that. The first question, Susan, is for you from Rashid. I wanted to ask about Oman specifically. So how successful has Oman's approach to the implementation and enforcement of financial crime laws and regulations been?
Interesting question. I hope I'll be able to answer it to Rashid's satisfaction. And maybe if I can put my advisory hat on, having worked in the entire region for almost 6 years, Oman is one of the countries that I've observed for sure that rules before they come out as a royal decree are discussed by large groups within be it government or private sector or public sector and so on. And the idea here is Oman as a country is very, very keen to always practice best practices, put in practice the kind of things that many countries in the globe practice. So it's encouraging to note that Oman does not always have to wait for a specific law to then govern and guide the various entities to walk the walk similar to international institutions, but it's something that they impressively have embarked on and have done. I mean, for example, a good example was I recall when AML was first spoken about. I know that many of the Omanis took on board what the global international regulations were. They brought it to Oman and they wanted to discuss it. And there were a lot of sessions being held by various entities and by various individuals to discuss how can this impact us in Oman. However, having said that, Oman has regulators that set out certain regulations from various angles, and they work almost very closely with each other. But then they specialize if it is, for example, banking. So Central Bank of Oman issues regulation, or if it is listed entities, that's the CMA in Oman. So I would say they've been pretty impressive. Their record is quite good. And to be honest with you, this is something that I've observed, having traveled in the entire region. I've traveled to Saudi Arabia, to UAE, Abu Dhabi, Dubai inclusive, Qatar, and many other countries in the region. And I've observed that Oman has this habit of wanting to be always the first in coming up with the idea, even before the regulation is put in place and it comes out as a Sultani decree.
Thank you very much, Susan. That's great. And I guess following on from that, David, a question from Hind. What are some of the kind of key threats that you see coming across the region? So we've talked specifically about some of the kind of AML, cyber, and fraud requirements, but are there other drivers that you're seeing from across the wider region?
Hi. Yes, I think when you look at the region, right, you see potentially volatile situations. You have war zones. You have sanctioned countries, comprehensively sanctioned countries like Iran and Syria, and it's all very important to know what's sanctioned, what's not sanctioned, right? You need to know this, and you need to be able to react to it very quickly. As an example, over the last 12 months or so, if you look at the 4 major regulatory bodies, the United States, the UN, the UK post-Brexit, and the EU, there have been about 7,000 different sanctions updates and changes just in 12 months. And they happen, and you need to know about them as quickly as possible because you need to address them. This is a huge deal across the entire world, but of course across the region. And to the point that you were making earlier about UBOs, ultimate beneficial owners, part of the understanding ultimate beneficial ownership with regard to sanctions is very important because you really need to know what is owned in the majority by a sanctioned individual or entity in order to comply with that 50% rule across both the EU and the US. And that is really, really difficult unless you have a dedicated team, as Gurminder was saying, to dig down into ownership across languages and regions, because that ownership by sanctioned parties is often, as you were mentioning, quite hidden intentionally. And it's something that has to be worked on to really comply with sanctions across the board And I think I'll stop there and let other people speak.
No, that's great. Thank you, David, and a really important one. And again, you know, that there aren't so much the sanctions specifically aimed at the region, but I guess because of so many people and businesses from other sanctioned entities traveling through the Middle East or doing business with the Middle East, that's really where that challenge comes from, and one we will explore in more detail in further webinars over the course of the coming months. So thank you for that. Okay, I've got a question for Nora here from Supano. So we've talked a little bit about guidance and regulations for the financial sector. What about regulations or recommendations for other types of regulated entities in the region? So I think earlier you talked a little bit about some of those kind of non-financial businesses as well. Are you able to opine on that, Nora?
Yeah, sorry, in my response across, okay, all the regulations or all the guidance that UAE has been issued or us incorporated with other regulatory authority, it was issued for both sectors. It's either financial institutions or DNFBB sectors. So both our regulations and these things was issuing for both sectors. It's either from the cabinet resolutions or the recent guidance that we issue in regard to the crypto asset or other things. Yeah.
Great. Thank you, Nora. And I think, again, that guidance is really important because I know you are issuing kind of very specific guidance for different types of industry and types of businesses, which is great. Okay. Questions coming in thick and fast. So thank you very much. I'm trying my best to keep up with them. So next question from Madi for Gurminder. So this question is around cybersecurity, Gurminder. So cybersecurity issues are a hot topic at this time, and we witnessed many incidents facing companies negatively and affecting their ability to work and secure its continuity in the market. How can we support as compliance officers mitigating these cybersecurity threats?
Thank you, Dickon, and thank you for the question. Cybersecurity is a reality, and cybersecurity failures is a bigger reality that we have these days. I feel every institution is trying to go digital, and even UAE wants to go digital. So how, as compliance officers, we can actually help in the controls for cybersecurity is first to understand what are the data points that will be made available to the public, the systems that are going to be used, the IPs, whether the countries that we do not want to deal with or we do not want our services to be made available to, how those are going to function. That is definitely one of the keys. How and when we can report those frauds, what are the penetration tests that are being conducted much before we launch into these digital era technologies, whether it is mobile based or it is an internet based application. That is something that we need to see. Going forward, I feel one bigger reality that we have is work from home. We are using our laptops, we are using unsecured networks. So how our systems are configured, what kind of firewalls are there, what kind of controls are there, is something, though I definitely agree that AML compliance professionals might not have in-depth knowledge, but I think it is high time that we started speaking to the CIOs and understanding what are the kind of controls that are there. And I believe just like the KYC that we do for our customers in our own premises, the same kind of a KYC and the same kind of data that is being stored, where it is stored, whether it is cloud or it is on premise, what are the controls around it, who has the access to it, who can view it, who can edit it, is something that we all should be knowing as of now. This is what I can contribute as of now. Thank you.
Thank you, Gurminder. And I think something you said there as well is really important, which is the conversation between compliance and IT security and business as well. I think historically, cybersecurity was often dealt with in a kind of different realm and a different set of teams and people. And actually, I think given the nature of the threat and the criminal activity, it must form very much a part of that kind of dialogue between compliance, IT, and business, because of the kind of three key threats it faces to businesses, I guess. So thank you for that. I think some really interesting points there, and we've got lots of kind of great questions coming in, but I think unfortunately time is running out. So what I'd like to do is just quickly turn to our panel and ask them for their kind of parting thoughts. So we've heard a number of threats, risks, and issues discussed today in this kind of introductory session, from sanctions to cyber to fraud, new regulations, requirements, and activities for businesses. So maybe if you could just each give me kind of 1 or 2 minutes around what are your parting thoughts and recommendations for all of those senior business leaders and experts who are on the call today with us. So potentially, Susan, can I start with you, please? Any parting advice or recommendations from your side?
I think cyber financial crimes and any form of financial crimes or fraud is typically very difficult to detect at the outset. But it's a reflection of how good of an internal control framework you have in place, and the kind of or quality of people that you have that have the right competency to actually ensure that nothing goes past them. So it's three factors, I would say. So your framework that you've set out in the company itself or the organization you're working at, and the second part of it is the capability of people that are handling this, because this is not a junior job. This requires a lot of know-how and the digging around and doing further analytical work. And obviously, it is important that as an organization, the message is sent out clearly to the employees of the entity that they work for. I think that's my closing remark to all of those that whether they're working with or within this speciality. Thank you. Thanks, Dickon.
Susan, thank you very much. So the importance of having the right framework, the right capabilities and expertise, but also you talked about that kind of cultural element, or the messages and the comms being sent out across the entire organization. So really important. Thank you very much. And David, just maybe if you could give 1 or 2 parting recommendations from your perspective.
Well, some of it Susan's already shared. So I will just add that, and it may seem quite obvious coming from me, but I think you really need to have high quality data that you get in a way that makes sense to you, that is delivered to you in a framework that you can work with and that you can trust.
Absolutely. Very important. So thank you, David. Nora, from your perspective?
Highlighted with regard to recommendations, a firm need to devise structures and thought-through strategy to appropriate address any risk through the allocations of resource, establish a clear line of responsibility, and adapt of a risk-based control that align with their inherent and any emerging risk came through. Thank you.
Thank you, Nora. So clear risk strategies coupled with kind of clear lines of responsibilities, and then that allows you to kind of deliver your risk-based approach. Is that right? Fantastic. Okay. And Gominda, from yourself, thank you.
Thank you, Dickon. So the only thing that I would like to say in conclusion is that times have changed, the laws have changed, the regulations have changed, the regulator has changed. But we are still blessed that the regulator is giving a lot of guidances to us. Having said that, those guidances come at a cost. If you do not understand our own customers, our own environment, our own areas of work, we will never be able to apply them judiciously. We will never be able to have a robust risk-based approach, which is the need of the hour. And lastly, I will definitely say manual work is redundant now. The new norm is technology. So technology not just is definitely it's a cost, but it is a cost which has a lot of benefits, I feel. So we should be looking at technology, and for having that technology, we should first have the understanding, again, as I said, of the laws and of our customers. Otherwise, the technology will give us garbage in, garbage out, I feel. Thank you.
That's it. Thank you, Sir Gominda. The importance of good technology, obviously we've discussed, really valuable, and following the right guidance and the right recommendations there. So I think a really, really interesting set of discussions across the panel. And I'd like to thank you all very much for your expertise and observations. I think it's wonderful to see so much positive activity coming across the region. And I think that's actually come out very clearly in this webinar today, that companies across the region are really putting in kind of maximum efforts to make sure that they can identify potential links to criminality, whether that's direct or indirect. Then we've discussed the importance of capabilities and training, so getting that expertise into the business, which is really, really important. And we've also discussed the kind of specificity, so understanding the specific risk that your organization faces and having the data to kind of back that up and support that. So thank you very much to our wonderful panelists and experts today. I apologize if I haven't managed to answer everybody's questions around the audience. If you'd like to continue the conversation, please do drop me a line afterwards, and very happy to help either directly or pass you on to the relevant panelists as well. So before we conclude the session, I just wanted to thank our brilliant panelists, Noor Mohammed Al-Salami, Gominda Harinder Singh, Susan Daniel, and David Hodgson. Thank you for joining us today and sharing your insights and expertise. A big thank you also to Dow Jones for your support in hosting and broadcasting this webinar and this series of webinars. It's always a great pleasure to work with like-minded businesses, fighting the good fight, as we say, and we really look forward to the next 3 webinars in our Middle Eastern series, which will be taking place in September and October, to deep dive into some of the issues we have explored and discussed today. So thank you very much to all of our guests for attending this webinar. I hope it's been useful, interesting, and valuable, and I wish you all a wonderful afternoon. Thank you.
Thank you.